4 stocks I own, July 2018 edition. Welcome in. If you are new here, I am Jeremy. This is a financial education channel, and today we get to do my favorite series we do every single month at the beginning of the month, talking about my 4 biggest stock market investments going into the next month, guys. I love this series, just kind of talking about why I like these particular stocks, why they're my biggest positions right now. And as always, let's just get right into this. If you have not already followed me on Instagram, make sure you follow me on Instagram. Posting a lot of content on Instagram now, especially if you're into stock market stuff. Definitely follow me on there. All right, my 4th biggest investment in the entire stock market right now is in a company named Callaway, ticker symbol Eli. All right. Callaway is a golf company. They also own a few other clothing brands. The one they just bought the past year, which is Travis Matthews, which I'm really excited about. Another one called OGO that does a few different things. And it's a company that has a pretty small market cap, about a $1.7 billion market cap or so. They do over $1 billion in sales. And this is a business that has really turned around in a big way that I'm excited about. If you look here, okay, they are dominant in pretty much every market they really want to compete in the golf game, okay? In the United States, they're #1 in total clubs, all right? Huge market share there, huge market share in Europe, a massive market share in Japan, massive market share in Korea. They're the creme de la creme in all the markets they compete, which is one of the biggest things I look at in investment. I really want like that top brand, or if there's somebody coming up, then maybe they have a chance to be that top brand someday. Callaway has been one that's been taking market share from competitors over and over again. We'll look at some stuff here in just a second. A matter of fact, it's on this slide here, okay? This is a U.S. market, okay? The U.S. retail hard goods market share. Look at the way they've increased our market share over the years, all right? They had around a 14% market share just going back to 2012. Now in the United States, they're up to a 26% market share, all right? That is huge. That is huge for a company like this. That just shows that management is executing on their vision of kind of expanding this company and taking market share from competitors. And the best part is it has not hurt gross margins. Gross margins have actually been helped. First off, let's look at net sales. Net sales, you can see the business has turned around dramatically, okay? This was a business that, was kind of just, stuck in the 800 million type revenue number, and now they're actually over $1 billion and growing quite substantially. Gross margins have turned around completely for this company. Going back to 2013, they're around a 37% gross margin. Now they're up to 46% gross margin. EPS, this was a company that was losing money if you go back to 2013. Then they started kind of eking out small profits, and now this company is getting much more profitable. Obviously in 2017, they pretty much over doubled up their EPS. Net cash from operations is up substantially. They're starting to throw off a lot of money with this business. And part of the reason is the U.S. market is up 9.5% just in Q1 2018. The U.S. market has been improving. This is one of the big bullish theses on why I got involved with this stock in the first place. I started buying the stock back in January and February, and one of the big reasons was I saw the market kind of coming back to golf and whatnot, and as the economy gets better, more people like to play golf, but that wasn't the biggest thing. The biggest thing was the return of a gentleman by the name of Tiger Woods, and some people laughed at me when I talked about this. Tiger Woods, you think he's going to bring people back to golf? And oh my gosh, does it work? Because basically what happens when Tiger's playing good, when Tiger's playing in tournaments, what ends up happening is viewership goes through the roof. If you look at ratings that on a golf tournament that Tiger Woods is in, right, versus one he's not in, it's not even on the same level. It's unbelievable the amount of viewers Tiger Woods brings in. And when a lot of people are watching golf, that means a lot more people actually want to go out in there and play golf. It's just one of those kind of sports where people, the more they watch, the more they're like, hey man, I need to go pick up my clubs and go play and maybe get some new equipment and things like that. It's a very big thing. That's one of the big reasons why golf is growing again in the United States. Golf ball. So this is a business that has really exploded for the company. Look at their U.S. retail dollar ball market share, okay? Going back to 2013, it was less than 8%. Now they're all the way up to over 14% and have a great chance of taking that well over 15%. As of this most current quarter, they were actually at a 16.2%. So regardless, even if things were to weaken somehow for the company, they should still be well at a 15% plus market share. So they've grown that business phenomenally. Not just grown it and for growing its sake, but also brought this business to be very profitable. Going back to 2012, this was a business for them, a line of business that lost them money. They took a $14.5 million loss in 2012, okay? Another $3 million loss in 2013. And then they start finally making some profits with this business. And now they've made almost $27 million in segment profit in this past year. That should be well over 30 in this upcoming year as long as they execute, all right? Now, one of the biggest hidden advantages to this stock, something that's not even seen, is their TOPGOLF investment, all right? TOPGOLF is an amazing venue. If you have never been, I don't even want to explain it to you. You just need to freaking go to TOPGOLF, all right? And so they own between 14 and 15% ownership in this company. Their cost basis on what they actually bought in for ownership of this business is somewhere around $70 million-ish. That their investment should be worth at least $400 to $500 million now. And basically the way TOPGOLF is increasing their business and increasing their profitability and increasing around the world, I can see TOPGOLF as a standalone company being worth at least $10 to $20 billion within 5 to 10 years, all right? If you do the math on that, so, Callaway has around a 15% investment in that, right? Basically, you're getting the whole entire Callaway business for free, essentially, okay? As long as they can sell out for a massive profit, which, TOPGOLF is just something that's exploding around the world. Anybody that's got one in their city knows how busy it is. Like, it's crazy busy. They make a lot of money. It's a lot of fun. It's a great time. And so it's a thing that's not even like seen with this business that it's just phenomenal to have, okay? Now, this company has a little bit of a rich forward PE on it, but it's not really rich when you start breaking it down. So a 21 forward PE on this business, but once again, they don't even take into the fact that this company has on their balance sheet a massive TOPGOLF investment that if they were to sell that off tomorrow, they could probably get at least $400 to $500 million for that investment, right? That they could just buy back shares, in a huge way and make that EPS look way better. And so the forward PE, in my opinion, is not where it should be. And also, I think they're going to actually beat where analysts are expecting earnings per share to be at this year and whatnot. So a business I'm really excited about. That's why it's my fourth biggest investment. My third biggest investment is a company named Toll Brothers. Toll Brothers is a home builder. If you do not already know, Toll Brothers is a luxury home builder specifically, all right? You can see the way this business has increased over the past few years for the company. I mean, coming out of the recession, business was weak. $1.48 billion in revenue in 2011, 1.88 2012, and then they start to kind of get this business kind of going as the economy strengthened. And now in 2018, they're expecting close to $7 billion in revenue, guys. Everything in the past year is just across the board up. Units, dollar, average selling price, is up. Backlog, everything across the board is just going great for this company, all right? Also, something I want to point out, some people say, oh man, we could, have a real estate crisis again, and someday we'll have a real estate crisis, I'm sure. Who knows if it will ever have anything like it was in 2008, 2009, that was so ugly. But, there's a big fact here, okay? The fact is, going back from 1970 to 2007, there was around 1.6 million homes built per year, okay? Single family homes. If you go back and you look at 2008 to 2017, there was only around 885 homes built per year, right? That's around a 700,000 home per year shortfall, all right? Which means anybody that thinks we're overbuilt at this point, it just doesn't make factual information, all right? It doesn't make factual information if you're looking at it from, historical standards in the United States. So we have not been building nearly as many homes as historically, if you go back to the past. So which means there's definitely a lot of potential still out there to grow in the housing market, especially if the economy strengthens stronger. This is a company that's well diversified across the country. It's not like they're just in one or two markets, and if those one or two markets get hit, they are diversified all over the United States, and they're in all the markets you want to be, okay? So basically meaning the United States would have to go into a massive recession for this company to really be hurt. If just one or two markets got weak for this company, it's not like the company would be devastated or something by that, which is something I love, that they're very well diversified, all right? Something else I love is this company doesn't really compete against most companies. This company competes against a lot of the private builders because they have homes in the luxury end. Their homes are $800,000+ going into this year. The average, home price could go up to somewhere close to $900,000 for Toll Brothers, right? While everybody else, the D.R. Hortons, the Beezers, Lennar, Pulte, KB Home, all those guys, they're competing really in the middle class. They're competing in that $250,000 to $400,000 home bracket, which is why, a lot of these guys have their average selling price of somewhere around $300,000+. So, a lot of those guys are cutthroat. They're really fighting it out. Toll Brothers is like, we're going to compete over here against some of the private builders. We have way less competition. We're focusing on the high end, which is a phenomenal thing, all right? This is a company that they don't just sell single family homes, okay? They also have a big condo business. They also have really increased their business in age qualified, which basically means, you know, like retirement communities or where you got to be like 55 plus. That's now almost 20% of their business, which we know baby boomers are retiring in mass amounts over the next decade. So that could definitely be a benefit to their business. Also, they have a city living part of their business, which is building skyscrapers and, you know, different types of, not necessarily skyscrapers, but big buildings in big cities. Think about New York City and some of those type of markets where you're going to build, you know, a big complex that's, you know, 40, 50 stories. They also own, you know, a big chunk of that business, all right? Next thing I want to draw your attention to here is a fourth of the buyers of a Toll Brothers home pay cash, all right? They pay cash for that home. Also, phenomenal credit ratings for these type of customers, all right? They're the type of customers that if interest rates continue to rise, they're the type of customers that aren't hurt nearly as bad as some other customers because basically a fourth of them are buying cash, so the interest rate literally doesn't even affect them. And then also another great segment of them, you know, have the best of the best credit ratings, so getting a loan is not an issue to them. A lot of these buyers have a lot of money behind them, substantial assets in the bank, substantial income. So, you know, if their payment goes up, if they do have a mortgage, their payment goes up $100, $200 a month. A lot of these guys are not, you know, breaking the bank for. It's not really like the more middle class type home builders where, you know, that the mortgage goes up $100, $200 like the person can't pay. It's a different situation there with Toll Brothers buyers. Forward P on this company of around a 7.5, so very, very low forward P on this company. I love the business, love the company, love the management team. Great company overall. That's why it's my third biggest investment. My second biggest investment is a company named Cirrus Logic, otherwise known as Cruzy Doozy, ticker symbol CRUS. Cruise is a audio chip supplier to basically most smartphone providers out there. Also a lot of smart devices and accessories and things like that they're getting into. Think about anytime you have to talk to your phone, or basically anytime you talk to any type of device, there's audio going through that, okay? There's good chances it could be a Cirrus Logic chip it's going through. It could also be a Qualcomm or some other company, all right? Think about anytime you hear music out of any type of device, whether you're talking to your iPad or your phone or you know, a speaker of some kind or anything, Cirrus Logic makes chips for that, okay? So, and if it's an Apple product, it's probably going through Cirrus Logic chips, all right? Apple's by far and away their biggest customer, is not even close, all right? So, Cirrus Logic, this is a company that right now they're spending a lot of money on research and development, okay? Record amounts on R&D right now. Unbelievable amounts. You know, for the size company Cirrus Logic is, to be spending, you know, somewhere around $366 million in fiscal 2018, that's a substantial amount of money. But the reason they're doing it is they have a phenomenal growth trajectory for this company. They have a lot of huge opportunities. And think of Cirrus Logic as a home run business. It's not like they're just hitting singles and doubles out there. They hit home runs, all right? This is a company that they spend a ton of money on R&D, and then all of a sudden you're like, why are they spending all this money on R&D? Their business is going down, or their business isn't doing anything right now. Why are they spending all this money? And then all of a sudden there's a new product that comes out in a new Apple device or whatnot that Cirrus Logic has, and the next thing you know, their revenue grows 100, 200, 300 million. Their profitability explodes and whatnot for this company. They're a home run based business. They have a lot going for that. It's a company that has a long-term track record of growth, all right? Phenomenal. When I love to look at, you know, where a company's income and revenue has gone over time, all right? Jason Rode, the CEO, since he became CEO around 2007, 2008, his business has taken off. This used to be a business that brought in around $180 million in revenue, and look how the way it's just increased. Now, every single year is not an up year for Cirrus Logic. Like I said, it's a home run based business, okay? So if you look, fiscal year 2014 was a down year actually for the company. It looked like, oh my gosh, what are things about to go bad for Cirrus Logic? You know, everybody, you know, was getting out of that stock. The stock was devastated. It went from a stock that was around $45, $44, $45 to next thing you know, the stock was somewhere around, it bottomed out around $16, $16, $17. And everybody was really scared of the business. And next thing you know, this business just takes off to massive growth. And now fiscal year 2018, it was not a growth year for the company. It was just a, you know, kind of a rock steady year, technically down just a bit there. And that's kind of the way their business is. You just, they have times when they're just growing like crazy, and then they'll have a year where they kind of flatline, or maybe their business is down a bit and it looks like they can't grow, and then all of a sudden the next thing you know, they have a huge growth trajectory because they got a new product. So this is really the only company in the world that is completely dedicated to the audio experience, okay? No one, a lot of companies make different audio chips here and there, but in terms of one company focusing on the whole audio signal chain, Cirrus Logic's really the only one out there. Everything from the microphones to the audio codecs to the digital signal processing, they have unbelievable, custom software they can do, audio amplifiers, the whole deal, they can do it all, okay? So anything you possibly need in audio, they provide that for you. They have those type of chips available for you, all right? And they are really close with their customers. Apple and them are like this, okay? That's the type of business we're talking about. So they're accelerating R&D into a few different things, all right? So one is digital headsets. Another one is voice biometrics, which is going to be a huge opportunity for the company, all right? They're also expanding their portfolio in boosted amplifiers, which they're really excited about. Some boosted amplifiers they're actually providing for the Android market now. They basically have said, Jason Rhodes said on a conference recently that he hasn't shown it to a customer who's not excited about it and wants to include it in future products. Smart codecs, MEMS microphones can be a big business for the company. Software capabilities. They have a lot of stuff they're working on with Apple that they can't talk about, unfortunately. It's the one, kind of annoying thing about their Apple relationship is all the stuff they're working behind the scenes, which I would guarantee you the high majority of Cirrus Logic's employee base is focused on Apple and expanding content in Apple and doing innovative things and whatnot. Like I said, them and Apple are like this, right? So basically a lot of the stuff that's going on with them and Apple, they can't talk about. They can't talk about specifics. Oh yeah, we're doing this. We're going to include this new chip in an Apple device next year or whatever. They can't talk about that. It's in their contracts. They're not allowed to talk about any of that type of stuff. So a lot of what they talk about is kind of expanding into the Android market and whatnot. Balance sheet wise, phenomenal balance sheet. $434 million in cash, no debt on that balance sheet anymore. They have a big share repurchase on. Just in Q4, they purchased around $60 million worth of shares at an average cost basis of $42.20. I would assume they're buying shares in a major way right now. Reason being is shares are really cheap right now, and where this company is headed, as long as they continue to execute, is much higher from here. So needless to say, I would bet money they're probably buying shares really heavy right now. Right now, it looks like their business is down. Once again, I just want to kind of point this out. Looks like they'll do on a non-GAAP basis somewhere around, they're expecting at least around 51 cents per share on a non-GAAP basis. Where in the same quarter last year they did around 85 cents. We don't know all the specifics around it. What is kind of speculated out there is basically Apple is probably going to go to another Cirrus Logic chip, and so they're trying to wind down some inventory there, and basically, so they can produce for the next iPhone. Also, I think Apple's kind of doing things a little more conservative going into this year, where they got all their chip suppliers too excited last year. They ordered way too many chips early and ended up hurting the entire supply chain and whatnot. It hurt all semiconductor stocks out there, pretty much ended up getting dinged in the end with that one. So I think Apple's just kind of taking it more conservative this year and kind of limiting their inventory going into this next iPhone cycle, all right? Next thing I want to point out is their low forward PE, so forward PE of under 12 in this company, and that doesn't even take into account like why I'm in the stock. I'm really in the stock for all the things they're going to be doing in 2020 and past. I think this company has a very bright long-term future, so that's what I'm really excited about. And some news just came out last week in regards to Cirrus Logic, which somehow an analyst knows or is speculating, which I don't know what his sources are, but he says Cirrus Logic has won the spot in the next generation of Apple AirPods, all right? Apple AirPods are the wireless, little headphones that Apple sells. I think they're like $139 or $159 or whatever. It's not going to be a huge revenue generator for the company, but this guy's talking about it could add 50 cents to the EPS line. That's massive. And this is one of those things that it's always been out there that they could, definitely expand into new Apple devices over time. Something like this makes sense, but this wasn't really one of my bullish theses on why I'm involved with this stock. I'm involved with this stock because I think over time, Apple units will continue to move up. I think over time, Cirrus Logic will continue to expand content with Apple. I think over time, they're going to, Samsung is a customer of theirs, but Samsung buys some of their cheaper products. I think they're going to be able to upsell Samsung over time, and maybe they have a chance of someday getting Samsung to be like an Apple-related customer customer to them, meaning they work like this with Apple. I think there's a great possibility of that. Voice biometrics is going to be huge for this company. Jason Rhodes has said in the past that this is something that could potentially double the company when those chips actually start coming out. So there's so much excitement. For me around Cirrus Logic, the short term is a short term, which is kind of like blah right now. But looking at this from a 2, 3, 4 year perspective, it's a really exciting company, guys. It's a company I've been in and out of several times in my investing career. I've followed this company for a long, long time. I know the business very well. Management's phenomenal there. My number one biggest investment out there is a company named L Brands, ticker symbol LB. They own some phenomenal brands, okay? Victoria's Secret, we're talking Bath and Body Works, Pink brand. Does it get better than that, right? A strong brands. There's a business that makes a majority of their profits in the fall time and winter time, obviously around Christmas time. The rest of the quarters are kind of like lame-o quarters. But needless to say, even in this past quarter, they were able to grow net sales 8%. Net income was down pretty substantially because of the Victoria's Secret products. Basically, L Brands is kind of, at least in the short term here, they're growing revenue for revenue's sake, I guess you could say, which is not something I always like, but it's something I understand because from a competitive landscape, sometimes you just want to steal market share, and you're going to get the customers through the door, however you need to get them through the door, okay? Amazon does this all the time. Amazon gets a pass on it. Like L Brands, because I guess it's an established company, no one ever gives L Brands a pass on growing revenue for growing revenue's sake, whereas a company like Amazon or some of these other companies, Netflix, for instance, they're like, oh my gosh, yeah, they're just growing to take market share right now, but someday they're going to turn on the profitability. I think L Brands will be able to turn that profitability on in a big way over time. Right now, they're just kind of fighting off some threats there. Victoria's Secret business is what's holding the business back right now. When they are able to get that turn, which I'm pretty confident they'll be able to do, it's just going to be a huge catalyst for the company. Bath and Body Works is growing phenomenally right now. Like, look at the profit for Bath and Body Works, up 21%. So I'm very confident they'll be able to turn that Victoria's Secret business eventually. I'm not confident on when it will be, whether it will be this quarter, whether it will be this year, or whether it be next year, but I would expect them to be able to turn it pretty soon. On the balance sheet side, they got an okay balance sheet, all right. I give them a pass basically because it's such a profitable business, all right. But they still have over $1 billion just sitting around in cash. That number should go up as the year progresses, and the big profits pouring in the back half of the year. They do have around $5.7 billion in long-term debt, but like I said, this business is one of those that just throws off a lot of money, and I don't want to call it necessarily a recession-proof business, but it's one of those businesses that gets hurt, way less than other businesses out there because they sell bra and panties and soap and stuff like that, like stuff that's not very expensive and stuff that people would say are necessity-based products rather than selling high-priced products that some companies sell and whatnot. So I give them a little bit of pass on the balance sheet there. Certainly not my favorite ever though. Comps have improved dramatically for the company, so the company is expecting full year 2018 comps to be up low single digits. They're also expecting earnings per share of between $2.70 and $3 per share. It'll be interesting to see if they were just kind of sandbagging those. I mean, even if they hit those numbers, like, I'm happy. As a shareholder of L Brands, like $2.70 to $3 for a company that's $30-something a share, like I'm happy with that. I have no complaints there. But it'll be interesting to see if they maybe sandbagged a little bit. That's what some analysts are expecting. Maybe they sandbagged a little bit and they're actually going to have better numbers. We'll just have to see. I'm not banking on that, but we'll see how things play out. Comps have been improving dramatically for this company, all right? If you look, 2013 comp store sales were a disaster for this company, just an absolute disaster, comp sales in general, right? 2017, every single month was down. It was just ugly. It was just horrible, all right? But look at how things have recovered. So February, they grow 3%, then March 4%, April no, but then May they grow 5%, which is the biggest improvement in a long time. And I think June's going to be a pretty strong month for the company. We'll have to wait. The numbers should come out within the next few days of me posting this. So it'll be very interesting to see what those numbers end up coming out to be. Company at a 12.5 forward PE, so relatively low forward PE on that company. And they pay out massive massive dividends. The dividend yield still on that stock is, I think, somewhere around 6%. Huge dividend payer, very profitable business, great brands. It's just, as soon as the one thing is holding this company back is turning that Victoria's Secret business around in a big way. Once they get that turn, which I'm pretty confident they can do, you know, it's a game-changing type stock as far as the amount it can go up in a short amount of time. So I hope you guys really enjoy this. As always, I love sharing my 4 biggest investments with you guys and just kind of like the reasons I'm bullish. Let me know what you think about those stocks in that comment section. Let me know what your 4 biggest investments are, or just your biggest investments in general. I'd love to hear from you guys as always. By the way, make sure you follow me on Instagram if you are not already. Thank you for watching. Have a great day.